Thank you for the introduction earlier. You're too kind. Just to quickly introduce myself, what we do is I'm Sam Tiltman. I work for Marsh McLennan, a professional consultancy company which advises clients of all sizes across the fields of risk, strategy, and people. I work in the risk part of the group, which is called Marsh, and our principal business or our value to clients is we advise them on insurance. We're an insurance brokerage, so we help design, place, and administer insurance, and we also provide risk advisory, particularly supporting clients with their enterprise risk management frameworks and operational risk management requirements. So that's really the perspective I'd like to provide today, following on from the opening from Theodora, the report, which is fantastic. And it's always good for us when we see our industry and the dreaded I word or insurance mentioned and those interdependencies. And we were having discussions the last few weeks preparing for this session today, but also over many months and years about how important insurance is to the overall equation. So it's really a privilege to be here today. And actually, if we talk about those 7 areas that Theodora mentioned, we actually in my company work across all 7. So it's just great that actually this is seen already with Zenzic and your stakeholders, how important it is for those areas to collaborate. So if I just sort of open my remarks about insurance on the next slide. For me, it's really representing the CAM space or the CAV space to the insurance industry. It is one of the crucial components in getting AVs operational and enabling trust. Typically, for most industries I've worked with in my career and even today, we advise both companies in this sector, but also other companies either entering or considering to enter. So a lot of my work and my team is engaged on working with very large automotive OEMs who are either investing directly or indirectly into this space, or they just need to learn more about how this can potentially disrupt them. And what's come up through our conversations all the time is actually insurance is legally required, right, for vehicles on the road across multiple jurisdictions, but is also a key part of the equation in helping enable and build and sustain trust in new technologies. And we've had that experience with previous disruptive innovations in my firm. Most recently, you could argue the internet, e-commerce, cloud computing. All of these innovations require trust from the public and stakeholders who represent us in order to be deployed both legally and commercially. So it's a great opportunity for me, my industry, and my peers. The second point is we used a sumo wrestler here to demonstrate the issue. And actually, Tom mentioned this earlier, is actually commercial operations or commercialization. That story, the route to profitability or making operations commercial, is crucial. Typically, for a new mobility company, insurance is one of the highest cost constituents in the business model. So actually, if you can get the risk and the insurance piece right or wrong, that can actually be the difference between a profitable and unprofitable enterprise, or a key component of the company's equity story. We mentioned IPOs or the aim to go towards the FTSE or the NASDAQ to become a certain size. One of the key components of the equation is managing the total cost of risk. And we have seen companies fail or fall down because the insurance costs have been unsustainable, particularly across other new mobility sectors, including micromobility, peer-to-peer sharing, vehicle sharing, electric vehicle OEMs as well. So a lot of those have had issues with insurance. So I would remark that actually, as you're building business models and looking into commercialization and the company strategy, actually insurance is a strategic topic, not a reactive operational thing to do down the line. The third one for us in our industry is it's really an opportunity to drive down risk globally, improve societal outcomes, and increase efficiencies. And Tom mentioned quite a few things earlier about the business case is solving problems. And for us, insurance is one of the opportunities to solve problems. But autonomy in itself, when it delivers upon its premise, will be saving lives, increasing efficiency, but also increasing access to new services. So a lot of my clients are, everyone sort of likes to focus on robo taxis. They like the name, the idea, the concept. We are actually now seeing a lot more innovation in new mobility services that use autonomy to provide access to new types of services that can complement existing public and private ones. So from Marsh McLennan perspective, we see particularly autonomy as being part of the overall equation, not considered in isolation, which is very exciting. The fourth sort of point for my opening remarks is actually a lot of people groan and complain about insurance being slow and backwards looking, and it can be a blocker to new mobility clients. So the mission in my group and my team really is to help make it a business enabler, not an inhibitor. But again, that comes down to actually embracing risk and insurance in the business model and at the executive level. And I'll share a couple of insights soon. What I'd like to remark here is the insurance industry really has a long-serving track record of supporting innovation. So there's a few examples: the aerospace industry, satellites and telecommunications, the internet and e-commerce, and obviously international shipping and commerce. So for us, we actually view this and advocate within Marsh to have insurers actually consider this to be the next huge disruption, but also something we can support like we've done in the past. Has bigger societal outcome. And then last but not least is actually two sides to the coin. So there is an opportunity for my industry, but actually if when AV becomes mainstream and actually the primary mode of transport for goods and people, both public and private domains and industrial applications, this will significantly disrupt my own industry. So our early research shows that typically, if we look at gross written premium, which is top line revenue for insurance, across most established markets, it's anywhere between 30 to 50% of my industry's revenue is for motor, automotive and related lines. So you imagine if we were to remove a lot of that risk and reduce it and reshape it, that will completely disrupt and change my entire industry, which is really exciting. And I think when we last spoke at the CAM Innovators event, I used the word terraform, and I still stick by that. I do feel autonomy and connected vehicles in themselves will create a level of disruption on that scale for my industry. So this is the sort of remark we're giving. And so what we're saying to customers in this field is embrace insurance, but also my industry needs to step up. And this is a great opportunity. So that's my sort of opening remarks. But I think today, some of you might be interested in going into a bit more detail about the risk and insurance challenges. And I will share some insights on, more particularly for the group here, we are a global company and we do deal with deployments, particularly in the US and EU, as well as the UK. I will share some insights on the UK AV bill and risk and insurance considerations. But before I sort of go into a bit more detail, were there any questions on the sort of high level stuff? Oh, brilliant. Okay. So if I could move to the next slide, please, Tim. Thank you. So what are the key insurance considerations? And this is based upon my group and my company's practical experience on getting autonomous vehicles on the road or industrial applications. Really, traditionally in the insurance industry, we sort of tend to look at a risk, and the whole industry is based on what we call product silos. So here's motor, here's product liability, here's cyber, here's directors and officers liability. And so you just buy an assembly of products based upon risks. Now, what we've really seen for new mobility is you require more of a horizontal approach. You need to look at the operation and the risks more holistically and actually build an assembly of products or an overall solution. So the traditional insurance approach of going to market and buying individual products with individual companies, individual advisors, really does not work well for new mobility, particularly autonomous vehicles or semi-autonomous vehicles. So for us, it's all about that horizontal approach, looking at the bigger picture, looking at the commercial, or sorry, the deployment model, the R&D plan, the roadmaps, the operating design domains, all that sort of stuff, and actually building something bespoke which responds to your needs and the particular risk landscape. Number two actually is related to all these points, is co-creation flexibility. A lot of insurers are known, or the insurance industry, from being quite inflexible. You know, here's a risk, go and talk to that department, go and buy that product. We do find actually a lot of this stuff is cutting edge, and a lot of these business models are new. We do have to co-create together between the client, ourselves as the risk advisor, and insurers and reinsurers to develop something that responds to particular needs of that particular business case and that particular deployment. At this point in time, there are no magic out-the-box solutions, particularly as we sort of drive through these different phases. So we do look for insurers who are willing to be a strategic partner, but likewise, we also see clients who view insurance strategically like we do and like our other clients. If you sort of seek to look at it transactionally, just try and get the cheapest deal possible with any insurer, do it last minute, we find that that really doesn't work well, because sustainability is crucial in building these solutions. We have seen clients sort of go for the cheapest deal with a non-specialist insurer, and as they sort of go through that exponential growth or expand their activities, the insurer midterm says no, and then they have to sort of panic and go out to market and buy something else. So for us, it's all about finding the right insurers who look at the strategy of the client and who are in for it for the long term. Then the third point is actually, it's easy to talk about R&D and testing and mapping activities, which themselves require certain levels of insurances and risk management. But the crucial differentiator is when you start going pre-commercial, proof of concept, or going into commercial applications, both public and private sectors or hybrid scenarios. This can create insurance and risk challenges because we're obviously moving from non-commercial entities or enterprises towards commercial deals where contracts are signed and there are stipulations on liabilities, both insurable and non-insurable. The fourth point is, I mentioned before, we need to consider actually where you're in public or private domains. Obviously, public are heavily regulated. The UK, we have Road Traffic Act, certain insurance obligations, but actually, even if you're going into private domains, partnering in sort of industrial applications, such as mines or ports or airports, which Tom mentioned earlier, those have particular risks, and those environments might demand certain levels of insurance, which can be surprising for customers. So I think that sort of resonates with some of the points Tom was making earlier, is when you're testing or going into new domains or new relationships, the risk on paper you might feel is the same, but moving from, say, a mine to an airport can be a game changer risk-wise. And this is where you need to sort of consider different risk environments and their different risk and insurance considerations. The second to last point, we can only insure something which is legal, which sounds like a stupid point, but actually it comes across a lot. Regulation is really quickly developing. There's no perfect regulation now, but from the insurance industry, we can only insure something that's legally permissible to insure and pay claims. So there's an intimate linkage between regulation, law, and insurance, which was outlined earlier in the Zenzic report under the interdependencies. So there's a very, very tight correlation and relationship between insurance and regulation. Last but not least is what we call the transition period in March. We're all talking about the future having full autonomy or majority autonomy. But in this sort of transition phase, we are going to have a mixture of different business models, different technologies, and different levels of autonomy. And this sort of grey area does present quite dynamic liability shifts and environments, which need to be navigated very carefully. Just to provide some sort of insights as well internationally, as I mentioned, we work globally in Marsh. I think we give an idea, we worked on about 70% of the US's autonomous miles last year, and we work across EU states and in different applications. So we got this sort of privilege of being able to view different challenges, both risk and insurance, but also regulation. And sort of high level, a lot of you know this, so I won't go into too much detail. We can always go into it another time, is just comparing, and it's quite fascinating, the different approaches, regulatory ones, between US, UK, EU and China. And typically it's the markets, it's a philosophy from the stakeholders and regulators, is do you regulate first, deploy later, which is more of a UK and an EU thing, or do you just deploy now and work it out as you go along, which is clearly the case in the US and China. And that presents different approaches and different risks. So particularly if you've got companies here, obviously focusing on the UK, as you go into different markets, it can be a whole different ballgame. Even if you're doing the exact same sort of deployment, the same service, for example, comparing Germany with the UK, with the US, with China. And last but not least, we talk about insurance ecosystems across those different markets, state versus federal laws in the US, but also in the EU. We have EU sort of level laws and EC frameworks, but also local interpretations, and also regional versus national. So a very complex regulatory, legal, and insurance landscape. That's my sort of considerations we talk about when we support clients. I think my overall remark is actually the sooner you engage your advisors and your insurers, the better. And actually, as much insight as possible into your future business plans or ambitions is also important, because it's for us, if we select the right insurers who can grow as you grow, particularly if you're looking into different domains or different markets or different services, the last thing you want to do is mid-term have to arrange another program for another service. You really want to have one or two strategic insurers supporting you. So that's my sort of general insurance and risk overview of how we support clients in this space. Now, next, or last but not least, the next slide, I will talk more specifically on the UK AV bill, given the audience here. Now, we have prepared a paper, so if anyone's interested in the details, more than happy to share. A lot of work was done clearly over the last few years. My overall remarks are, this is just phase one, it's gone through. We're now talking about secondary legislation. One of the key things in the primary was insurance was not mentioned much. So this is in the second phase, the chance for the industry to step up, and actually a crucial thing that needs to be done. So the last thing we want to do is enable secondary legislation, which goes active, and then after the event, insurers say, we don't like that or won't support it. So we actually view the insurance industry stepping up in that phase two to be crucial for the country and the deployment. And that's something we're pushing quite hard in my company with the partners I work with, both clients and insurers and also reinsurers. We talk about the four sort of key points of the bill. A lot of you guys will know it, so I won't go into too much detail. It's about authorizing the AVs. Number two is liability, which is essential for us in the industry. Number three, which is very interesting, were marketing restrictions, really important. And last but not least is obviously automated passenger services. We do need to talk about commercialization. Everyone talks about or thinks about AVs. They think about private cars in the future driving you privately. But as a lot of us know here, those early business cases, or actually the crucial ones, will be hybrid public-private sort of services, or particularly public applications of AVs, which has its own expressed or specific regulations and considerations here in the UK. Now, just to give some of the high-level risk and insurance considerations, we mentioned insurance isn't mentioned much, so there's still work to be done, but there are applications on the road today, R&D, mapping, testing, pre-commercialization, so you can get insurance today and can get risk support. What I say about the specific risk and insurance considerations, for us, it's mainly you've got to think about who is going to be the operator or the owner. And we have specific language here in the UK now, non-user in charge, user in charge, and authorized entities. But I would say you've got to think about, particularly if you're in partnership arrangements, sometimes quite complex ones, who is actually the primary company or entity in charge, who's picking up the tab or going to be responsible for managing the risk first, identifying the risk, and then procuring the insurance, which successfully transfers risk, but also achieves legal obligations here in the UK. And then I mentioned earlier, it's we look at that horizontal approach. Let's ensure the movement risk. But actually what was clear, we've been saying this for a few years in Marsh, but what was great from the UK EV bill is there are a number of other non-movement risks you need to consider, particularly across legal and regulatory, compliance, management liability, intellectual property, what a lot of people call cyber or technology risks, and other financial risks. So we always focus on the movement risks. What I'd also say is think bigger picture. Who is the person or the individual who's authorizing the activity? Are they adequately covered? Is there adequate risk management first? Can the company protect itself? There are loads of different things you need to consider, and we mentioned a few in the paper. So we always talk about motor risk or movement, but also consider all of those other risk categories. And then my last look on this slide on the AV bill is insurance is absolutely fundamental, as a lot of you know, and Zenzic clearly know as well, which is great. We've got a whole section in this report. Without insurance, my industry deals with risk, right? So our industry is about understanding risk, quantifying it, and transferring it on a commercial and sustained basis. Now, you imagine is one of the key fundamentals of autonomy and CAM is for public acceptance, so the trust and safety equation. Now, how can we expect the public and our stakeholders to accept and trust AVs if the risk industry doesn't? So for us, insurance and risk is crucial to enable that argument and to support the broader other 6 interdependencies. So that's our sort of insight on the AV bill. Were there any questions or anyone interested in anything specific on UK AV bill and its risk and insurance considerations? Yes, I've got one here.
Hi, Sam. Nick Reed, Reed Mobility and Chief Road Safety Advisor, National Highways. Great presentation. I'd love to see your paper on the bill, if that can be shared with the group. I was interested in your take on data and the data that you will need to see or exchange with the developers in order to demonstrate that the requirements of the Act have been met, so that that safety has been improved, that they're at least as safe as a careful and competent driver, that no categories of road user have been exposed to increased risk. So how will we get the data that satisfies those requirements?
Yeah, it's a good question. Thanks, Nick. It's always great to have different perspectives. So I'm an intermediary, right? So I represent my clients on behalf of the clients, and we go out and get deals from insurers and reinsurers. So I see, what do my clients say, what do insurers want and the reinsurers want. And there is a bit of a dynamic tension. When we're placing and designing these programs, insurers have a bucket list, a long list of things they need, as well as regulators, as you mentioned. Now, one of the key challenges is we also have data protection law, which is quite stringent, particularly in UK and EU. So if you give everything or collect everything the insurers, the reinsurers, the regulators want, that actually increases risk for the industry. Huge amounts of data can be processed and collected through AVs. It's incredible, the sensory data. Now, if you were to collect that and store that for regulators and insurers, there is a cost to that, which needs to go into the commercial equation. Now, from the insurer's perspective, we underwrite risks based upon data, and there are dynamic models. But I would argue sometimes a lot of insurers ask for a huge amount. We sort of challenge them and say, well, what are you going to do with the data? Because this costs money for our clients to collect and creates risk. And we also need to make that comply, or the industry has to comply with data protection laws. You imagine how much that will cost given the volumes collated by AVs. So I do feel that's one of the areas that needs to be worked on, as well as insurance. And there is an interdependency between what the regulators need and want, but also the insurers, because we need something that achieves the fundamental requirement, which is, are these vehicles safe? Is the technology safe? And if incidents happen, can we have access to the data? But on the other hand, we can't specify and ask for so much that actually creates risk for society in itself. So I do believe there is a sensible balance to be addressed and created over time. I wouldn't believe, based upon what I understand so far, that we're there yet. And I think this is where stakeholders, as well as insurers and clients, need to come to a sort of industry standard agreement on what's practical, considering data collection creates risk for all stakeholders. Did that sort of answer your question, or is there anything else?
Yeah, no, that's great, Sam. Yeah, fully agree. Need a practical solution. It's what I've been working on with BSI and others. Yeah, love to share more about it.
Yeah, I'll be definitely keen to follow. And I think one of the discussions I have, I'm quite lucky because I have a lot of industry groups in Marsh. We're constantly bouncing ideas. So I talk a lot with our aviation team and other regulated industries like marine. And we're thinking actually we can potentially learn from other transport sections that are highly regulated, particularly airspace, where health and safety and trust and safety is critical. So we are having those discussions, and it's maybe a full process for this group here is to consider engaging with the other industry regulators and stakeholders to see if we can learn lessons and practicalities that they have too.
Yeah, sounds good.
Thanks.
Thank you.
I've got a summary slide, but I think I've gone through everything. I'm just wary of time. Were there any other questions for me? Brilliant. I think I won't go through these because I've gone over time. Sorry, Zenzic guys. But what I would say is, look, my key message to people going into operations is please don't make insurance an afterthought. We don't want it to be an inhibitor to your business. You need to really look at it as soon as possible. Get the right advisors in place, not only insurance brokers and risk advisors, but also lawyers and regulatory and other consultants. They're just as important because the last thing you want to do is you're ready to go and insurance holds you up. That's the last thing all of us want. That's it. Thank you.